the decisions in front of people who are getting close to retirement are only magnified.
We're living in a world full of financial decisions, how much risk to take, when to tap into savings, but most people weren't given a playbook for how to think through them. But that's changing. Advice is shifting from telling people what to do to helping them learn how to decide. Today, we're unpacking the future of advice and what it means for people and financial planners. Hello, and welcome to Money on Your Mind from Edelman Financial Engines. I'm Michael Liersch, a behavioral scientist, financial planner, and chief planning officer at EFE. Thanks for joining us for our conversation about how people are feeling about money, what they're wrestling with, and how financial planning can help you straighten things out. Today, we're talking with Bill Schultheis, an EFE Financial Planner. Bill, welcome to Money on Your Mind.
Hi, Michael, and thanks for having me on your show.
Well, Bill, you and I have had a number of conversations now about the future of advice and your passion about working with your clients and just people in general. Why don't you tell our audience a little bit about yourself? Our audience likes to get to know you, Bill, on a personal level, but also about your passion for being a financial planner and serving clients. So why don't you give us a little insight into who you are and why you like helping clients so much?
Well, Michael, I've been in the financial services industry for about 45 years. I grew up on a wheat farm in the southeastern corner of the state of Washington, 7 brothers and sisters, and it has been an incredible journey. Right out of college, I got a position with a major Wall Street firm in Seattle, Washington, and it was all about commissions and selling stocks, and I hated every day of it. I just was not born to be a salesman. Whether or not you were helping the clients was far down the list on what's important in the Wall Street firms making money. After 11 years, I said I'd had enough. I got out of the business and I had no idea what I wanted to do. In 2000, I published a book called The Coffee House Investor, How to Build Wealth, Ignore Wall Street, and Get On With Your Life, and hadn't looked back. For the past 23 years, it's been an incredible journey. 2 years ago, my firm was acquired by Edelman Financial Engines. I want to say it was a marriage made in heaven. But more importantly, Michael, what it does is it allows those individuals to focus on financial planning issues that matter most of all, like what you were saying, their asset allocation. When should they retire? Should they be making financial decisions that will impact their taxable income through retirement? It's issues like that that are so darned important, and it allows them to focus with their planner those types of issues. Most importantly, though, as the title of my book says, it allows investors to get on with their life. It allows them the emotional freedom to ignore the daily ups and downs of the stock market and focus on families, on careers, on retirements. It's just an incredible time to be involved in helping people.
So, Bill, thank you for sharing that and your passion about helping people not be distracted by, the things that people are typically distracted by, which you've alluded to, actively managing their portfolios, but forgetting about the whole point of it, which is the plan, the financial plan, how to use the money, the money coming in, where to put it. So with all of that in mind, why don't you share with us in your client conversations, and I know you had a lot of history here, and we'll get into that in terms of the past, present, and ultimately where the future is going in terms of advice. But what are you hearing from clients on, where we're at in terms of the investment and financial planning world? What are they saying to you? What are their concerns? What's top of mind, Bill?
Well, it's an interesting time for investors because of what's going on in the capital markets and the political scene around the world. But for the most part, everyone has the same need. We want to be involved in a career that's fulfilling. We start socking a little bit of money away, and ultimately we grow into a lifestyle that we want to maintain when we retire. And that could be a 20 to 30 year period of unemployment called retirement, which can seem daunting as you approach retirement. But everyone kind of wants to know, am I on track? What do I need to be doing today to get on track if I'm not on track? And so the big challenge is to creatively educate folks to take their attention away from the daily ups and downs of the market and bring it back to the decisions that they can control at the kitchen table, the decisions that they make on their everyday lives. One of my favorite stories is a couple came into our office, 10, 15 years ago, and the conversation was driven largely by the husband who had been actively involved in monitoring their portfolio on a daily basis. He knew there was a better way. And after discussing that, I turned to his spouse and I said, what do you think about all this investing stuff? And she said something that was incredibly profound. She said, Bill, I don't get involved in this investing stuff. I just manage the checkbook. And to me, that hit the nail on the head. It's the decisions that we make in our everyday lives that are going to have a profound and positive impact on how we live our retirement years. And what an honor, what an opportunity it is as a planner to help guide folks in making the decisions that will have an impact on their well-being for the rest of their lives.
So it's interesting, Bill, that you say that. And I kind of had a reaction, like a visceral reaction to that comment, like, I just manage the checkbook, when it really is everything, right? To your point, the money come in, money going out, just like we kind of introed things here. Was that comment meant to kind of minimize or diminish that role when it, to your point, it's actually so important? Like, what do you think, where was that coming from? I'm curious.
Well, I think it's in our DNA, Michael. My parents were born in the Great Depression, and I have the passbook savings account of my grandparents. They're passport-sized books where it shows the inflow and outflow of money down to the penny, and that's how they managed their financial well-being. It was through their saving and their spending, but somehow that responsibility of saving for a rainy day morphed into, let's pursue these 5-star mutual funds, and that's the way to build wealth. But in our DNA, I think we still know that we need to be responsible in those decisions. And she was just bringing it to the forefront of that conversation that we were having.
I think that's a really extraordinary insight, and that'll lead us to kind of our next series of conversations and questions, which is, and this is going to get a little dorky for our listeners, but Bill, they know I'm all a little dorky. There's a whole thing where like past is prologue, meaning, that the past actually gives you a view into what the future is going to look like. And I love this idea of bringing back something that actually isn't so basic. It's really the accountability of documenting, what your money is doing for you. And that ledger, like as you're describing it, like, the tracking of the money is something that, again, we've just lost track of in pursuit of these other distractions. I love that past as prologue kind of idea. So when you think of the future of advice then, Bill, and sort of elevating this notion of managing money, paying attention to your money, can you share with us what you think that starts looking like, elevating that role?
Well, if you're 25 years old, the responsibility is to have an awareness of where you can save intelligently, whether it be a workplace tax-deferred plan or a tax-free Roth. But as you go through your life, the decisions become more complex in regards to what type of accounts am I saving in? Is it tied in with the legacy I want to leave? Is it tied in with the lifestyle that I want to live? Those decisions are becoming much more complex, but it's creating more of an opportunity to make smart decisions with a financial planner so that ultimately the life that you live in retirement mirrors the expectations that you had while you're working.
How would you encourage someone who's younger listening to this to, start really pushing away that social and public narrative and really focus on, those complex decisions and getting started as soon as possible. So what advice could you share to that younger audience?
Well, one of the things that I think is very meaningful is to look back over the past 20, 25 years. And, 25 years ago, the internet was in its infancy, and we're thinking, okay, how is this going to change our society? What can I invest in to take advantage of the internet? But the concept of letting the free markets work has been profound in that we're letting more importantly, the creativity of human beings who are working in those companies integrate the internet. Same thing now with whether it's cryptocurrency, whether it's AI, do we try to take advantage of that by buying individual stocks? Or do we let the free markets, do we let the creativity of individuals take those tools and integrate it into their companies? And we take advantage of it by investing in broad-based market, passively managed index funds. The story doesn't change. What it does is it allows you to nurture your creativity and be a participant in the unfolding of capitalism and industry.
I really love that, Bill. And it's really great advice. Now let's go to let's call it older audience. So we were just talking to a younger audience. So let's go to an older audience. What would you say to those people? How should they think about the future and the future of advice?
So the complexities of the decisions in front of people who are getting close to retirement are only magnified. When should I start taking Social Security? How am I going to fund unexpected healthcare costs? How can I minimize the biggest drag on my portfolio over the next 30 years, which is going to be taxes? How am I going to set up my portfolio, my account, so that it represents the legacy that I want to leave? Those decisions are not simple decisions. And that's where the role of a financial planner can really look at all different dimensions of planning, of life experiences. And a planner really becomes more than a financial planner. They become a life planner. And I see that in my own experience over the past 25 years. We had people that started engaging with us when they were 60 or 65 years old, and now they're 85 and 90 years old. And we're helping them, we're helping their spouse. What an opportunity to really touch people's lives so that they can live a meaningful life for the rest of their life.
So then within that frame, let's bring in the elephant in the room before we transition to our final set of questions that everyone loves hearing, like mistakes, client mistakes, and what they should be doing now. But before we do that, the elephant in the room here is artificial intelligence. How should people be thinking about integrating that new technology, in these later years?
Well, just as the decisions in front of people are becoming more complex, the opportunities are greater, in my opinion, using AI in a way that helps decipher the complexities. But AI is never going to take the place of a relationship with a planner and an individual who wants someone to really understand the depth of what is important to them as they move through retirement. I'm not sure that AI is going to pick up the cognitive decline of someone very slowly as you see them quarterly or semi-annually in the context of a meeting and make decisions there based on that cognitive awareness of how they're managing their money, the family members that can or cannot help them make those decisions.
So I appreciate that perspective. So let's move into the last question, actually the last two questions we have, which is, Bill, what's one mistake that you see clients making right now? Everyone loves to hear about that, Bill.
Well, for a 25-year-old, the mistake is they're afraid of the stock market. They're just starting to work. They're starting to earn their hard-earned money. And they've heard that the stock market will crash once in a while, and so they're afraid to invest. As a 25-year-old, you should be hoping that the stock market crashes because you've got all this savings ahead of you in the years and the decades ahead, and it'd be much better for you from a financial standpoint if you started investing down here than up here. But more importantly, one of the things that we are encouraging all folks to consider is their asset allocation between stocks and bonds. There's this notion out here that the stock market always goes up, and if we do have a correction or a bear market in 2 or 3 years, the stock market's going to be back up, reaching its highs. That may not be the case. From 2000 to 2009, the stock market was flat. And if it was flat for 10 years, it could be flat for 20 years. No one knows. But one of my favorite sayings by a wise old sage is, if you have already won the game, why continue to play? For me, for our clients, we're saying, hey, if you have built up a portfolio where you don't need to get these oversized returns to reach your financial goals, make sure you've got an asset allocation that matches your emotional ability to weather what could be a nasty bear market. I'm not predicting it. I'm saying it might happen.
Bill, that's super helpful because what works today doesn't always work tomorrow. And that leans very much into the future of advice and really keeping your eye on that risk framework around what you're invested in. So let's get to the last question, which is, what's one thing that you think everyone who's listening or watching should do right now?
One thing that I have challenged myself to do, which has had a meaningful impact on my life, I encourage all the folks we engage with to consider the same, and that is to broadly keep track of how you're spending your money. Not down to the penny. It's not a matter of hardcore budgeting. It's at the end of the year, where is my money going? And why it's so important is that it allows us to ask ourselves the question, am I spending money on those things that give meaning to my life? You know, life is short, and we've done a great job of building up these financial resources. Let's make sure we're spending those dollars on things that do give us joy, that do give us meaning.
Bill, what an excellent way to close this out. Make sure you're using your money in a way that's consistent with what gives you joy. Thank you so much for joining Money on Your Mind today.
Michael, it's been a pleasure connecting with you.
That's everything we have for today. This has been Money on Your Mind. A big thanks to financial planner Bill Schultheis for joining me. We'll be back next Wednesday with a new episode. Subscribe to the show on Spotify, Apple Podcasts, or YouTube so you don't miss it. And we'd appreciate it if you left us a rating too. I'm Michael Liersch from Edelman Financial Engines. Talk to you next time.